Hey everybody, welcome to Trendy Trading. Let's go ahead and get started with our 2023 projection. So over the years, last 2 years specifically, we have done projections that have worked out very, very well. And so I want to give you a 2023 projection, and in hindsight, they have worked very well. Matter of fact, our 2021 projection, we came in at the high, just a few points shy of the actual price that ended 2021. In 2022, we had an if this, then that scenario that also worked out very well, pulling back into the demand zone that we found. All right, at the end of last year, working very well for this year. So even though this year pulled back quite a bit, we actually found the bottom of that drop, if you will. Okay, so this year, I believe, will be a lot like 2022, meaning it's an if this, then that. Okay, so let's go ahead and go over this. Hopefully, it doesn't look too busy. I try to make this as clean as I could. Now, one huge difference about this projection compared to the last 2 years. Notice that I am actually using a yearly candle. That means each one of these candles are representing 1 year. So this is like, this is a very big picture, but we're using some of the same formations, the same methodology, so forth for this actual video. So in 2023, what we're noticing is at the end of 2022, we indeed got our inside candle, and that makes me really happy. As you guys know, this is the first step for the foundation of an inside and up or inside and down formation. Okay, so we needed this candle to close within that previous candle, which is right here. Okay, and remember, what I'm looking for is a close within the body, not the previous wicks. Okay, I do not count the wicks. So this did indeed close within the body. So very, very happy about that. The next thing that I did was I measured from the 2009 rally all the way to 2021. And I want to show you that by using the Fibonacci's here. Okay. Notice we had some buy signals, okay, back in 2000 and it looks like 16, 17. Then we created a demand zone. So this is your inside and up formation. Notice that in 2020, after the elections, we came back and tested that demand zone. Okay, so that worked out very well. Again, we created the demand zone here. Prices then moved up, and then again tested to the downside into that demand zone. So that demand zone worked very well. Now, what's important about this demand zone? Well, it's already been tested. This is not a fresh zone. Very important to understand that. And I say that because if price were to come back to here, then we could easily fail or break below this formation itself. However, when measuring this, and this is really interesting. So the first thing I did was I came in here, let's take this off, and I found the bottom of this inside candle, and that was pretty easy. That was the close on last week, okay, and that was 382.43. So we marked the 382.43, but notice when the Fibonacci's are placed on here that this is confluent to the 23.6. Now, when I say confluent, it's not exact, but it's very close. You can see that they're lined up. Matter of fact, if I open this up quite a bit, it's around 381.81 versus 382.43, so pretty darn close. The fact of the matter is we're not broken down below the 23.6, and using trendy methodology, what I'm saying is that the rally itself, far as a yearly candle is concerned, closed above the extreme bullish channel that I identify in my Fibonacci. So again, if price can hold the 23.6, the rally of 2009 all the way into 2021 is extremely bullish, regardless of the pullback that we saw this year. Now, what that's going to end up serving for us into 2023 is this is pretty much what I would consider the line in the sand for 2023, meaning if price starts to break above 2023, then we're looking for moves that could push us into 397.97. Bulls have to get above this price, in order for it to look a little bit better. If they can't get above that, then this is going to continue to the downside. That's how I look at it, okay? So this is resistance here, okay? And up above 2022, this is the downtrend. So basically what I did was I measured this entire candle, and this is your 618. If 2023, we cannot push above this, then that means this trend in 2022 continues to look bearish. Okay, so again, just using the Fibonacci there. Okay, and again, bulls have to get above this price here or price continues down. This is also a target if price stays above the line in the sand. Again, what I'm saying is if price stays above the 23.6 or the 382.43, we're looking for 397. Okay. Again, this is very short term, if you will, meaning like say we gap up tonight, this week stays bullish, we could see 397.97 to the upside. Okay. So again, I don't want to be overly biased, so I'm throwing out a yellow flag and a disclaimer. These are all just my opinions. All right, but they have worked out very, very well in the past. So I just want to make sure everybody knows I'm not trying to change the bias. Or I'm not trying to give you bias, okay? No bias. It's if this, then that, all right? Now, if price starts to break below the 23.6, there's some very important details here. This line here, 363.51, okay? This is basically saying that if we break down below here and we start to flush, I could see us coming into 363.51, but I would expect buyers to come in. A scenario here would be, we have banks coming up in just about a week or so on their earnings, and then we have big tech that's coming in around the 23rd of January or so, and throughout the remainder of the next couple months, we have earnings coming up. So if for some reason after this bigger sell-off, we kind of find some buyers into the new year, and we start to push up, we could see these levels that I'm showing you up here. If not, if we flush down into earnings, okay, and we get to 363.51, but it's not holding, then we have a higher probability that we're looking for a double bottom, if you would, right? And then if that breaks down, I'm looking for the 38.2. Big level here. Okay, so 9 EMA, this is your cloud. You can see that when price is above the cloud, it likes to stay above, right? So this is all it has served as a support system, if you will, for many years. Matter of fact, if we're going back all the way here to 95 to 93, we've always somewhat been above the cloud. Notice that. See here, we even roll over from an inside and down formation. See how well this works inside and down. We come down into the 9 EMA back in 2001. Okay, we found support, we bounced nicely, but we come back down, and then we get to the next EMA. And if you guys remember on my charts here, my EMA, this is your 13. Okay, so the 13 EMA served as support. Once we got above that level, you could look for prices to sustain and create higher highs. Notice that we came into supply here, we broke down, and no matter how you looked at this, if you committed to the yearly candle, this cloud has always been support. Okay, so we have never broke down below this cloud. That's pretty cool. All right, so again, if price were to come back, there would be a lot of confluence here, folks. I would love to see, personally, I would love to see the market flush down into here, because we'd be finding support at around 321 to about 314. And remember, before the year ended, I was on the mic and I was saying, for myself, I would much rather on a bounce look to use some sort of protection to identify this I said 325 to 315, I think, and we were going over debit spreads that really looked nice. They're about a 7x to 8x return by identifying this about 6 months out, and sometimes using even a longer dated put debit spread for about 12 months out. Now, again, this is just a hedge idea. If we start to break down below this 382.43, 363.51, and again, this idea for me when I was explaining it is something that I would be willing to put up as a hedge trade, but also it has to be an amount that I'm willing to lose, because this could easily not happen because we're holding the 23.6 and we could find ourselves making our way all the way back up towards 429. All right. So again, it's if this, then that. And that's what's so neat about our overall methodology is that we do the broad market analysis, right, every weekend. So I'm always coaching and letting you know where we are lining up with this overall projection. And going into 2023, I plan to update this a lot more often. We'll just kind of keep this down here. So notice this, I would, encourage you to do the same, like create the same chart, name it 2023 projection, and it will be something that we just go back to and take a look at on the SPY. Okay, so again, my projection to the downside, if this then that, I'm looking for 325 to 315. All right, I would expect buyers to come in here. If we happen to break below that 315, I will obviously coach and give you my opinion on where I think we could head. It would be probably down here towards the 50 at 272, and at an extreme, I would have to say 223.92. All right. Now, the next thing is I feel like I have given you a lot of information to the downside. Again, as long as the 23.6 holds and we are going to target this 397, okay? And 397, you can see it's not that far away, all right? But what that is the 38.2. It's the bear channel of this move down, okay? So I simply measured from the high to the low, and this is 23 and the 38, and this area right in here is a bear channel. If we break above 397 and hold that for several weeks, then that is a bullish note, and I do believe we could head towards 429. And again, that's what's lovely about this. We'll be coaching and going off of that. Now, this last part, I want to throw some caution at, because this is where bias could take over, and you listening to me could create a thesis in your head. But I need you to understand the thesis itself is only, for me, again, is what I'm willing to lose. What I would like to see, in my opinion, is a flush, okay? A really nice deep flush that pushes us more towards the 38.2. The closer I get down to that 325 to 315 level, then I'm looking at taking trades to the upside, okay? Then I would be looking at further out of the money call debit spreads. So right now we're just talking about simply the hedge that aims towards 315 to 325 in the event if we break below that line in the sand for 2023, which happens to be around 382.43 to 381. If you want to be even more cautious, I guess, would be that 381.81. Okay, and that's the 23.6. All right, and those are not exact numbers. You could go back, like on TradingView, you can use the magnet and you can make sure that you have the exact numbers in there. But for right now, those are 382.43 by 381.81. That area right there is what I'd be looking at and considering if I want to go short or if I want to go long. Okay, projection for 2023 at the end of the day, what I'd like to see is a pullback into at around 325 by 315, buyers show up, and then we slowly start to move back up towards Q2, Q3 of 2023. Okay. Again, I will follow price action, but This is my projection for 2023. If you have any questions, feel free to reach out to me. I really appreciate you guys. I appreciate your support, and I cannot wait to have an amazing year with you. Have a great day.